Hi, I'm Muhammad Ahmad Hamdan, your host for Money Matters this week, where we will discuss the low technology adoption among Malaysian businesses, so stay tuned. Good evening and welcome to Money Matters, where we share money insights that matter. Now, the COVID-19 pandemic has no doubt been a dreadful experience for all of us. On the economic front, we've seen many businesses forced to shut down permanently, and many others are likely to suffer the same fate. But in all of this misery and uncertainty, we've also come to realize that businesses can actually continue operating quite efficiently despite the restricted being in a restricted environment with the help of technology. Now, joining us today to discuss more on this is IDC Managing Director Sudev Bangah. Welcome to Money Matters. It's good to have you with us today.
Thank you very much. Love being here in the flesh.
Great. Now, it's been widely reported that Malaysian businesses in general still lag in technology adoption, especially among SMEs, which make up over 90% of business establishments in Malaysia. From your observation, has this trend picked up at all, or has it remained the same, say, in the last 5 to 10 years or so?
Sure. So I think the word lagging might be a little bit too, a little bit too wicked for the industry. I think that right now the Malaysian industry has tried its best to actually keep pace with its ASEAN neighbours as well as organizations across Asia Pacific and all the digitalization effort that's been going on. It's very important to actually break digitalization for Malaysian organizations into phases. When the COVID pandemic first hit very early on last year, and when all the lockdowns occurred from March to May, there was just this state of confusion across organizations in just trying to keep operations going on.
Right.
And when we transitioned towards Q3 and Q4 of last year, IDC's data, especially for Malaysia, was suggesting that organizations started to accelerate a lot of their digitalization.
Right.
They realized that the projects that they had put off and all the effort that had been put into a lot of projects that were stalled had to continue no matter what. So there was something that we saw between Q3 to Q4 of last year occurring for many organizations, and SMEs included. Then optimism started to grow, especially towards December of November, December of last year.
During the recovery phase of the MCO.
That's right. During the recovery phase, and when there was announcements on the vaccines, everybody got excited. And we saw money start to flow again back into IT. There was a lot of excitement around it, saying that, okay, we are going to adjust to the next normal. We're going to have to operate in this next normal. So let's get back into it. So January came, February came. Unfortunately, cases started rising again, and that optimism started to wane a little bit. So then when it shifted towards Q2 of this year, then we saw a few companies started to keeping the cash back, started to keep your cash back and reassess the situation to see what they should do. However, we did not see IT spending so much so as stop for organizations, the digitalization effort, but it was a little bit more targeted. And it was very targeted towards how they wanted to grow their business in very specific manners, given the COVID-19 pandemic and a prolonged pandemic that we're all in right now.
Now, Chief Statistician Datuk Sri Muhammad Uzim Mahidin this week reportedly said that Malaysia's per capita income is expected to increase, but much will depend on the economic recovery this year. He also said that this needs to be supported by Malaysia's efforts in enhancing the digital economy and the development of technologies in economic activities. Now, one of the main reasons behind the low technology adoption among Malaysian businesses that we often hear is that investing in technology, more so new technologies, can be quite costly. And many of these businesses believe that this is something that they can do without and still be profitable. What do you have to say about this?
That's a very interesting point, because when you use the term investment and cost together, it's very paradoxical in nature. When you think of an investment, ultimately, and the whole notion of investment in IT is towards the betterment of the organization, is towards building a stronger foundation towards what in IDC we dub a future enterprise. So in future of SMBs, will be leveraging off so-called digital platforms as well. So that so-called investment is ultimately for the future. That investment is for the betterment of their business into the future. But you're absolutely right. As we drive towards a digital economy, it isn't so much just the investments. It is about a mindset as well. The shift, the paradigm shift in the mindset saying that the traditional way of doing business can only yield me so much revenue. How do I actually take that up a notch? How do I operate a little bit faster, more efficiently? How do I keep pace with my neighbors? How do I keep pace with my competition? So these are a few of the different mindsets that organizations in Malaysia should definitely have when they do embark on technological implementation projects on IT.
Is this a uniquely Malaysian case, talking about this mindset?
I think in Malaysia, and funny you bring that up, a few years ago we had a survey across Southeast Asia and we started to try to understand the sentiment of CIOs when it came to IT investments for their organizations. And
CIO is Chief
Information Officer. Correct.
Okay.
So, and the funny part that we found across Southeast Asia, Malaysian organizations and Malaysian CIOs were the ones that tended to wait and see the most. So for Indonesian CIOs, for example, they were the quickest, they were the fastest to get into it. They were, in 3 months, they would invest into something, they would fail, they would try to invest again. Malaysian CIOs were a little bit safer. They're a little bit more cautious. They'll wait and see, they'll evaluate, they'll ruminate, and then they'll put a little bit of money in, try to see some ROI come back, then see whether I should invest a little bit more.
Why do you think so?
I really, sometimes I do believe it is our culture. It is our way, our upbringing when we think about money, when we think about how we want to utilize our money for ourselves or the organization. I do feel culturally that we think that way. But it's also the idea that we occasionally are afraid to fail in the project. And if you look at some of the top technology companies in the world, the thing they advocate the most, or the startups, the Amazons, the Googles, is to fail fast, pick yourself up, learn from it, and implement again. So that mindset has to really shift gears in Malaysia.
Right. Now, I spoke to Dagang Nextchange Berhad Dinex last year. The company is basically involved in digital technology. Its then Executive Deputy Chairman, Datuk Samsul Hussein, said that the firm, this was at the onset of the pandemic last year, the firm expected to see rising interest in digitalization among businesses as they seek to ensure smooth operations during global crises like the COVID-19 pandemic. Now, my next question is on investment inflow into technology. How big was the investment inflow into technology by local businesses last year, particularly against the backdrop of the COVID-19 pandemic? Are we seeing an increase in technology investments by businesses given the work from home situation amid the nationwide movement curbs? So
if you would have to probably look at it again by, I guess, the time period. If you were to ask me this same question about 6 months back, the number would have been very different from what we know today. And even 9 months back, it was a little bit more different. 9 months back, when we look at Malaysia, we were projecting a negative forecast from 2020 to 2021. It was sitting around -4%, -5% in terms of IT spending in Malaysia from 2020 to 2021. When we exited 2020 to 2021, and what we know today, we saw a +7% year-on-year growth, in fact, when it came to IT spending and the investments on spending in ICT here in Malaysia. And that was very much owed towards accelerated digitalization, targeted digitalization, and understanding what your organization really needed in order to move forward, rather than just throwing everything out and saying, I hope something works. They started to identify IoT projects, artificial intelligence projects, analytics projects very, very sharply in order to actually execute and invest your money very wisely that way.
Right. We are going to go for a short commercial break. Financing in technology, that's what we are going to talk about when we return after this breather. Welcome back, and you're still tuning into Money Matters as we speak with IDC Asean Managing Director Sudev Bangah. Now, this week on Thursday, Malaysia Airlines announced that it has teamed up with GE Digital to transform and modernize the airline's fuel efficiency program. They did not mention the value of the agreement, but my next question is on foreign direct investments in the area of technology in Malaysia, and how does it fare against FDIs in other sectors or areas?
Sure. So I think if you look at Malaysia, we've been in a little bit of a spot from, I guess, 2018 to 2019, where our total FDI net inflows have been pretty flat. It's been about $7 billion US dollars each year. When you look towards 2020, the total was about $3 to 4 billion US dollars in total. When we look at technology companies' net inflow, that's going to be roughly about $1 to 1.5 billion US dollars of the total 4 billion. When you compare it out, I mean, the services industry took a big bulk of that. Manufacturing was a big bulk of that as well. But I guess for technology, I guess candidly speaking about that is there needs to be an instigator around technology. If you rewind 20 years ago and you look at where Malaysia was in terms of FDIs and attracting technology companies across to our shores, we were right at the forefront. Everybody was talking about Malaysia. Everybody wanted to be here, and it was a mix of whether it was language, whether it was skill sets, whether it was cost of living. We had a very good package. But now competition, so to speak, across different countries have increased. You see data centers coming up in Indonesia, overseas investments occurring over there, even across into Singapore. Why are those not coming to Malaysia? So I think that is the discussion that needs to occur right now. We were talking about $1.5 billion US dollars out of a total of $4 billion from US dollars from 2020. There's a little bit of work for us to get done.
Now, we know that the government has over the years been trying to encourage more local businesses to basically invest in technology by providing grants, financing schemes, and other incentives through agencies like MDEC, which you used to be a part of. And what's the take-up rate like for these kind of financing schemes and grants, since many businesses actually cited financial reasons for their muted interest in technology investments?
So specifically in terms of the take-up rate of each program, I would not have the exact stats, but qualitatively what we understand from the organizations who have gone through these programs and even IDC assessing these programs, is the follow-through has always been the largest issue. So you got numerous SME Corp, you got MDEC, you got InScan, you got all of them introducing these programs for SMEs especially. But when you talk about SMEs specifically and going digital, it's more than just providing a platform and saying thank you very much and good luck. It's about giving that guidance to them and helping them to get on. Something as simple as even enabling a team to take photos of their goods and products and help them to list it online. These are some initiatives that we can be helping the SMEs do. Because again, SMEs in Malaysia, they are fairly traditional. They live month to month. They're really trying to find where the next revenue pot or profit is going to come from, unfortunately. So for them to dive into digital is as good as me asking somebody who's never invested in their lives to say that you should actually invest your money here. I'll be a little bit apprehensive around it. So we found that the follow through to get them through the door, that is the easy part, but to get them to follow through to the end, that seems to be the difficulty.
Right. In your opinion, should there be more financing options offered by both the government and also private sector, like obviously the banking sector, to help SMEs fund their technology expenses in a bid to boost SMEs' contribution to the GDP? Because we know that SMEs they make up a huge part of the Malaysian economy, but in terms of their contribution to the GDP, it's not quite significant if you compare it with the size of SMEs in the country.
Correct. I guess from our vantage point, or even my personal view on this, is the fact that I'm not a huge fan of funding. I do believe that funding can ultimately become a crutch for organizations to over-depend on. And the over-dependency on the funding is what does not help the organization, whether it's an SME or not an SME, to grow further, to have that spirit to want to grow and that hunger to want to grow as well. I think funding is a little bit of a boost at the start. That's very acceptable. However, more funding, I'll be a little bit apprehensive about that. A lot of the focus for me should be around coaching. Coaching, yes. I think coaching is very important to help them, whether it's structuring their business, helping them to open up doors, market access programs. These are things which are extremely important for a lot of these companies. Some of them have really good products and services. They just don't have that exposure. They don't have that access to speak to different potential customers out there. So I feel that's where the funding should go to, providing them those platforms to get out there, to offer them up, to actually put them in a position where they're able to sell, and to allow teams to actually help them to get their products and services in the fore. That to me would be better use of the funding rather than, sorry to use this term, handing it out. I don't think that would be a very positive way for us to actually approach this.
Are there a lot of coaching efforts to help these SMEs to actually get on board in terms of this?
There are several. In fact, I think MDEC has started to embark on that over the past couple of years. Those are some really good programs that I've personally seen and been involved in as well. I do believe that InScan is also providing a lot of coaching and mentoring as well for SMEs.
Right.
So these are out there. It's just, I guess the word and the news has to spread a little bit more. And again, it's a little bit of a mindset shift when it comes to saying that, okay, I'm not going to take some money, you're going to teach me how to do it. You know, the old adage, teach me how to fish, don't give me the fish. Yeah.
Well, that's very refreshing to hear. Now, we are going to go for another round of commercial break. But now, what opportunities are there in education technology? That and more when we return in just a moment. Thanks for joining us as we discuss further on the opportunities in education technology with IDC ASEAN Managing Director Sudev Bangah. Now, moving into edutech, since it's the talk of the town now, I would like to put things into perspective. Now, how big is the edutech business in the region and in Malaysia? Has it been growing year on year? If you could probably share the CAGR, the compounded annual growth rate of this edutech in Malaysia, and have you seen an uptick due to the pandemic?
Yep, EdTech has always been, I have to say, is a very interesting space. It's one of those spaces that has been around for a while, but really, I guess the attention, the spotlight is really on it right now. Where with the pandemic going on and schools closed, and unfortunately the majority of children, especially in the K-12 segment, they are unable to go to school. When you think about the size of EdTech, that is really how you slice the pie. So it's a little bit of a cheeky question that you're asking me. But in general, if you look at education technology spending by education institutes in Malaysia, if you're looking at IT spending, that's only about $200 million US. It's not really high. It's about $230 million US. But when you start adding EdTech, organizations that are offering online courses, who are raising funds, all of a sudden that industry blows up a little bit by 10 times. So being around the $2 billion US mark right now, and with a double-digit CAGR over the next 5 years, about 14 to 15%, potentially to about 50-55 billion US in the next 5 years, directly. So when you think around those numbers, then you're going to say, where's that going to come from? And of course, a lot of this is riding on the pandemic. A lot of it is riding on the prolonged nature of cases being high. Parents are getting worried to send their kids to school. People do want to further their own personal studies as an adult as well. Therefore, online courses and online learning becomes something which is very, very important for me to want to pick up. So it has definitely captured a lot of attention right now. We are seeing Malaysia, but of course Singapore and China and India being the two most prominent ones right now. India, Baiju, for example, they've just been, I guess, the poster child, for lack of a better word, of EdTech. Raising almost $2 billion US over the past 8-9 months, acquiring a lot of companies. And then you got 2U as well, which acquired EDX for $800 million from MIT and Harvard. That shows that EdTech is going to stay. There's a whole lot of money being put into this right now.
So you don't think that this is just a temporary thing because of the pandemic?
Oh no, it looks like it's going to be around for a while.
Right. Now, how does China's education strategy to make online classes free of charge and to actually ban Chinese edutech companies from raising funds via capital market, how does this weigh on the regional and Malaysia's edutech companies going forward?
Yep, I think that's a very captive instance in China. They are addressing a few different issues in China across technology companies as well as, I guess, edtech companies taking advantage of the situation of online learning. Providing very cheap upfront demo fees and all of a sudden hitting them with 1 year worth of fees, which is very expensive even for middle income folk in China to want to afford. And I think that's something that they're trying to stamp out, because as China especially moves towards trying to encourage people to have more children, if education is going to be expensive, that is a huge hindrance to want to have more than one child. Over the past few years, they've had the one-child policy, so to have more than one child, education being expensive, that would be a huge hindrance. So I think it's a very captive instance in China. A lot of it because Alibaba and Tencent are behind the funding of the two largest edtech companies in China as well. So I think this is, again, is very localized towards China, because again, when you look across to India, you look at the money being raised over there. Look closer to our neighbors in Singapore as well as Indonesia with Ruang Guru, for example, and see they've raised 55 million over the past few months as well, all about online learning and online courses. You can see that industry is really picking up. So I don't think that's going to impact Malaysia too much.
All right.
But again, right now, in Malaysia, if you look at the type of money being raised, we're sitting between US 50,000 to about 500,000 being the max at this point with all the companies there. It's not a whole lot of money, but you're going to need that money to actually get it out a little bit more, especially as demand starts to go up,
right,
these companies are going to have to ramp up and they're going to need funding from somewhere.
Right, Sudev, thank you very much once again for taking the time to be with us today. We really appreciate your time and insight on this program.
Yep, thank you very much for having me.
Thank you. Now that wraps up this episode of Money Matters. Do join us the same day, same time next week. Until then, I'm Muhammad Ahmad Hamdan. Thanks for watching and stay safe.